Hello traders, this is Rich Dare from Tradesight. This is the market preview for this coming Tuesday, January 29th. The current session was fairly pretty well bifurcated. We had fairly flat activity in the broad market overall, with the S&P closing up, about one handle on the day, but the Nasdaq side was considerably stronger for most of the day after we saw some early gains in Apple. The NQ side was up about 10 handles on the day, and Apple was one of the top performers. In fact, we actually had a really nice long trade in Apple over 438.25, and caught a nice scalp in there, taking advantage of that Monday morning amateur gap down. But let's stick to market preview for tomorrow. The Dow was lower on the day, and that was certainly struggling. The strength in the market really had been the more defensive, dividend yielding type names, and today was really just the opposite. Today was kind of just a almost like a cyclical correction within the market, if you will, with many of these top Nasdaq names being very oversold, like Apple bouncing back, and maybe a little bit of profit taking on breather from some of these Dow names. The market internals were not great though. Obviously the broad market side was quite a bit stronger, with advanced declines showing that the tape was definitely favoring the Nasdaq side all day. Nasdaq closed up positive about 300 issues on the day, and the S&P side, or the broad market, the New York side, closed down about 400 issues on the day. The currencies were kind of in a little bit of a lockdown during the day, with the advance in the dollar versus the yen kind of being arrested. Right now we're at 90 spot 50, which is a little bit off the highs, and potentially pulling back from a very overbought condition in the dollar versus the yen. So that's definitely something we'll want to keep an eye on, because that's, I think, in my opinion, been one of the very strong drivers of the market. But let's move on and take a look at the NQ futures and the ES futures. Here's a look at the ES futures on the daily time frame. We were up just a little bit on the day versus the previous settlement, but one key thing to really focus on here is that we're right into this 8-ace level at 1500. So this Murray math level at 1500 is lining up with a round number for traders to definitely keep an eye on. This isn't always the case. A lot of times the key levels, the 0-ace, the 4-ace, and the 8-ace levels are sometimes those in-between numbers and not necessarily one of the big round numbers. But in this case it is. So this 1500 level will be very prominent probably here for a bit. So definitely keep an eye on this, and keep in mind that if we do push back above this 8-ace level, then we are technically into the overbought area on the chart according to the Murray math levels. And from there, we're going to really have to start bringing up our stops and start thinking about potential for reversal to the downside. Not really doing that yet until we push above 8-ace. 8-ace level right now could be a very strong level that may need some consolidation, or perhaps even just some kind of a retracement back to the downside. We'll have to play that one candle at a time. If we do retrace and start to turn back down, first target's going to be this rising 10 EMA. We've been above it since the gap up in the beginning of the year. But if we do pull back, that's going to be our first pullback target. So 1485, 1486 on a pullback. That 1500 area at the 8-ace level is going to be very dominant for now. And if we can break and push above that, then 1515 will come into play on the SPOO side. Now the NQ futures have been relatively lackluster and really haven't done anything. In fact, we have now settled. Even though we were up on the day, we are still within the opening range candle from the first day of the year here. It is true. Sad to report, but you cannot make this up. So we are technically still neutral. We're still just kind of just pivoting right around the 6-ace level in the same consolidation area. So until we break out of this consolidation area, there's really nothing new technically other than just marking time and loading some energy into this pattern that's becoming elongated here as we go through and keep on adding candles to the same relative range. So here's a look at our multi-sector daily chart, and everything really was just kind of taking a breath today. The SOX was showing some pretty good performance. That was one of the sectors that was up on the day. Obviously, Nasdaq was relatively strong, so the SOX had the ability to perform today, and it did. The NDX was definitely outperforming the broad market, and the weakest broad market sector on the day was the XAU, which again was a source of funds. So things have been really rotating out of the more defensive names, out of the defensive precious metal stocks, out of the gold futures themselves, and also out of fixed income, and really been the source of funds for this advance in the broad market. Starting to get a little wide here, a little steep here, perhaps in this rotation, and definitely want to take a look at the technicals in the XAU, the gold mining sector. So we'll take a look at that in just a few minutes here. As far as the near-term internals go, we're still relatively neutral. We haven't really had that big climactic reading in the New York Stock Exchange 10-day trend, which is what we're looking at here. We're actually very, very close to that neutral area, which is just somewhere right around 1 or 110 area. So we're just kind of hovering here between oversold and overbought. So nothing new technically here. Another internal measurement in the near term here that is also neutral is the total put-call ratio. This remains still just basically right in the middle of overbought and oversold. So really nothing new technically here to put us on guard for any kind of a drastic move near term. Now the SPX versus the NDX here definitely did see a little bit of a curl up here in favor of strength in the NDX over the SPX, but we're still really in a pretty decent downtrend here, and haven't really been able to regain any kind of a positive footing here, with the NDX asserting itself with relative strength. A little bit of a turn up here. Let's see if we can build on something here. If we can build on this, and if the broad market wants to kind of just hang around this 15 level and kind of consolidate things, if the NDX continues to rise and the SPX holds up around that 1500 area, then that would actually be a potentially very bullish sign where the NDX could start to regain some relative strength, and then the NDX after the SPX, the broad market, after consolidating, can push through that 1500 level. That would actually be a very favorable development for the market. So we're going to watch this every day this week to see how this develops. Here's the SPX TLT cross, which is going to show us the relative strength of the broad market versus the defensive-minded bonds. We did push out to a new high at the end of last week and built on it by a little bit this week. So what we want to do is we want to take a look at the weekly chart here and see if this can really morph into something that's going to have a little bit more legs to it, and see if we can break out and hold above this prior level and get some more strength going into the SPX side, into the growth-oriented stock side. This would be very, very positive for the market, and this is exactly what the longer-term bulls are looking for, to see if we can break through here and hold this positive bias. What we're going to be looking for here is really something more along this lines, where we can build off of some kind of a base here, and then pivot higher and start some kind of a decent regression to the upside. Haven't been able to do that yet, but I really think that if the market is going to get some true legs to it, we're really going to need to see it come from money rotating out of the defensive issues, the bonds especially, because there's so much more money hidden in the bonds right now than the other defensive things like gold and silver and the mining stocks. So if we can really get up and start to pick up and break out of this recent range, that would be extremely positive long term for the market. Now, looking at the individual sectors, definitely want to keep an eye on the late cycle sectors right now, like the OSX, the transports, the airlines, and whatnot. and don't forget to keep the energies in there as well. This is going to be really key for the market breaking out and making a new leg here. We're starting to see some more positive action in the OSX. We're pushing above the 7/8 level with this 250 level at 8/8 next, breaking the new highs here. Got a new high in the move and also a new high close. Now the XBD, the broker-dealer index, did break to a new high, but just keep in mind that we're just gaining the risk level off this seeker exhaustion. We're at +1/8, so we're into the Murray Math overbought area of the chart. So if we don't break this risk level and turn back down again, a close under the 10 EMA is going to kick in a short trade on the broker-dealers. These are fairly well overbought. It's been a nice, well-organized move to the upside here, pretty much about 45 degrees to the upside here. So this could be one of these things that's getting a little bit long in the tooth, so definitely be on guard for a pullback here. Don't forget that broker-dealers are an early cycle index, so if these start to pull back or whatever, then you definitely want to see money flowing into those later cycle indexes like we had just talked about. And if you don't see that, then it will put you on guard that the broad market at 1500 might actually be a turning point to the downside rather than a pause, a refresh, and then a breakout to the upside. So it all depends on how aggressively money's going to rotate here. Semiconductors made a new marginal new high on the move. Really barely made a new high close. We're into the overbought area. We're up above the +1/8 level. +2/8 is 421.88. That's going to be considerable overhead, and obviously also a frame shift if we can take that out on a closing basis to the upside. Here's the BTK, which was lower on the day. Again, we're well into the overbought territory. We're getting up close to +2/8 at 1687. We've had this fairly lateral consolidation here where the 10 EMA caught up with it and started supporting price. So this isn't quite as overbought in the near term as the XBD was, but definitely want to keep an eye on this. If this rolls down, that's okay, but we want to make sure that this money's going straight into some of the other indexes rather than going to the sidelines or going into something more defensive. Here's a look at the XAU. The XAU is now into that 0/8 level at 150. We've been playing this the last couple days. We didn't play it today because it was getting a little bit long in the tooth, and I didn't want to get involved in this short right into that 150 area. But we did play it on Thursday on this bar down to the short side, and also Friday on this candle to the downside. I think you got to give this a little bit room to turn here, and just make sure that this doesn't have some kind of a reflexive rally back to the upside. And this is the XAU. Now the GDX, which is the tradable ETF that represents the same index, and you see how similar the chart looks. This did report a 13 secret exhaustion on today's candle. This is Friday's candle 12. This is going to print 13 tomorrow. So this is 13 candles down now and poised for a return back to the upside here if we can get back above the 10 EMA and change the short-term trend. So definitely keep an eye on this for an oversold bounce. The short side's getting a little bit long in the tooth, and this may need to have a little measuring off if it's going to continue to the downside or some kind of a lateral consolidation. If it does continue to the downside, that's going to represent a real momentum and a power move. It's going to be a little tricky tomorrow just because we're so close to these key technical support areas. But if we do break lower, I'd definitely take another good look at these on Wednesday and Thursday. Well, that's going to be it for this chat. This has been Rich Derrick from Tradesight, and as always, thank you for listening, and hope to see you again soon.